After pumping $1.87 billion in Adani, GQG Partners share fall 3% in Australia. After marking the first big investment of $1.87 billion in the Adani Group since the release of US-based short seller Hindenburg report, GQG Partners Incorporated saw a 3% fall in Australian listed shares on Friday. The company had invested a total of $1.87 billion in 4 companies under the Indian conglomerate Adani Group. Under the investment, the Florida-based firm bought 3.4% stake in Adani Enterprises Limited for about $662 million, 4.1% of Adani Ports and Special Economic Zone Limited for $640 million, 2.5% of Adani Transmission Limited for $230 million, and 3.5% of Adani Green Energy Limited for $340 million, showed an Adani regulatory filing. By early afternoon, GQG shares fell by 3% and the S&P/ASX 200 benchmark index was up 0.4%. Notably, GQG's investment has come at a time when Adani Group a large chunk of its wealth due to the plummeting value of its stocks in the market after the Hindenburg report. The company is the first major investment received by the Adani Group since the Hindenburg report alleged the company of stock manipulation and accounts fraud. Due to the allegations which the Adani Group termed baseless, 7 listed Adani companies have lost some $135 billion in market value since January 24. The Gautam Adani-led group called the report as an attempt to malign India's image at a global front. In a time when investors and companies are pulling out their money from Adani Group, GQG's confidence upon the group comes from its own deep dive research about the company. GQG's chairman and chief investment officer Rajiv Jain told Reuters that his firm had carried out its own deep dive into Adani and its findings don't relate with that of Hindenburg's report. Based on past comments of Rajiv Jain, he is the type of investor that goes for wherever there is unrealized value, said Morningstar analyst Sean Law, who covers GQG Partners. GQG's stock is up 3.58% so far this year, which is in line with the ASX 200, reported Reuters. Sean Law also added that Rajiv Jain doesn't run environmental, social and governance ESG funds. His investors are also well aware of that. Notably, Adani Group owns a large share of coal mines. The decision to invest in the Adani firm could prove to be a double-edged sword. The Morningstar analyst said there will be people who might avoid buying GQG shares due to Rajiv's decisions, and there will be also those who might want to invest their money due to the company's good performance.